Good morning, good afternoon, or good evening, everyone, and welcome to episode 3 of the series Keeping Ahead in Uncertain Times. Where are we going now? My name is Brian Jones. I'm from Ahead for Business, and we are a member of the Melbourne Business Network. Just a quick overview of what I'm going to talk about today. The first is the status of JobKeeper Relief, as we see now. Some detail on JobKeeper Dates. What is included in the 1,500 minimum wage threshold, tax issues for the JobKeeper, and cash flow incentives and importance of cash flow projection. But firstly, I have to give you a disclaimer that we have to give for all presentations. This is because the content of this presentation can only be general. It cannot be tailored to specific circumstances. So please consult your trusted advisor or a government department if needed. There have been some developments with JobKeeper Relief since its beginnings in March. JobKeeper Relief was due to last right the way through till the end of September, but the government has announced recently that JobKeeper Relief ceases for employees of childcare centres and sole traders in the childcare sector from the 20th of July. So this is going back a little bit on the fact that the promise was made that JobKeeper Relief would be in existence for a full 6 months for the whole economy. So does this mean that other sectors of the economy will be affected and JobKeeper will be terminated in those areas? Well, the government has actually stated that no other sectors will be affected, but we will see what happens. The Treasurer has stated that Australia will be paying for this initiative for many years to come. Enrolling for the first time. There will be many people who have not enrolled for JobKeeper Relief yet because they cannot meet the necessary criteria to be eligible to claim. That is the turnover decline test, the 30% turnover decline year on year, or some of the alternative criteria available. JobKeeper Relief is available for businesses with employees or business participants at any time if the criteria is met. Once tested, JobKeeper remains in place until the end of the system, the end of September. It is not necessary to retest for JobKeeper Relief once you have established that you have met the necessary criteria. However, whether you're already in the JobKeeper system or whether you enter the JobKeeper system in June, monthly declarations are required on the 14th day of each month by all entities entering the scheme, and this means monthly declarations to the ATO via their website. Now, here are all the future JobKeeper dates. These are the fortnights in which JobKeeper is going to be paid. This will be of special interest to people who are watching this and who are intending to enrol in the June month. Please note, these dates apply to JobKeeper Relief in respect of employees, which is a minimum 1,500 per fortnight per employee. But remember, it is not necessary for business participants to pay themselves 1,500 per fortnight. I think there is still some idea in the community that business participants in some way have to pay themselves 1,500 per fortnight. This is not true because of the nature of the way business participants generally pay themselves. What is included in the minimum 1,500 wages or salary threshold? Well, it's quite obvious in many cases what would be included for employees. So it's gross salary or wages as normally paid, all allowances except reimbursement of fringe benefits, overtime, shift and penalties, bonuses and commissions. The 1,500 is a gross wage, so it includes PAYG withholding amounts, and it could also include amounts under salary sacrifice arrangements. Typical salary sacrifice arrangements is often super. It's part of gross wages. What is perhaps more important is what is not included and what might be subject to error. Those categories are things like government paid parental leave, so paternal leave, maternity leave, workers' compensation or work cover payments, reimbursement of expenses, directors' fees, although directors' fees could come into the ambit of the business participant claim. Lump sum payments such as termination payments, exempt foreign income, and some fringe benefits provided to an individual where they are not part of a salary sacrifice arrangement. In other words, they're not part of normal salary. Tax issues of JobKeeper Relief. The first is assessable income. There are some quarters, I think, that believe that JobKeeper Relief payments are exempt from income tax. They are not. They are taxed as ordinary income. Why? Because effectively the payments are a substitute for lost turnover, which enables the employer to keep paying their staff and retain their staff who existed at the 1st of March 2020. But unfortunately, JobKeeper Relief was quite hurriedly put together because of extenuating circumstances, and we have to perhaps prepare for the fact that some people in the community will not fairly treat the system. So what can happen? Well, payments made to people who are not eligible for those payments, falsifying records or revising activity statements to meet the turnover fall test. So that could be either in 219 or 220, and of course that's illegal. Applying for JobKeeper Relief where no evidence of a business exists. It's possible if somebody just had an ABN that they could claim that they had a business that had a fallen turnover. Claiming for employees who are not employed on the 1st of March 2020. If you ever hear anybody say, I can employ somebody and get job relief, now they can't. Those employees had to exist at the 1st of March 2020. That's very important. Failure to pass the 1,500 threshold amount. That means it would be incorrectly calculated. Multiple eligible business participant claims. This can be people who perhaps have interest in several businesses and try and claim in all those businesses. They can only claim once. And employees who could claim more than once by having more than one employer. And to counter this type of activity, the ATO have a tip-off line, which you'll find on their website, the details there. And that will be to enable people to report people they think are not treating the JobKeeper Relief system fairly. Now, bearing in mind that JobKeeper Relief was brought in to help those people who really were badly affected by COVID-19. And we can see some obvious examples of people who have seen a drastic fall in turnover. Look at hospitality, look at travel agents, businesses, and anything to do with tourism has had some shocking declines. But the tip-off line is actually enable people to report illegal activity and behaviours, generally re JobKeeper claims. Underpayment of wages, you could get employers who are actually claiming JobKeeper Relief, but they're not actually paying $1,500 a fortnight. Now, this would take quite a bit of doing because each employee has to nominate to be part of JobKeeper Relief and surely would be aware that they weren't getting what they were entitled to, which is $1,500 a fortnight. Then you've got some other areas, which includes visa fraud, what's an employee, identity fraud, again relating to who's an employee, and manipulating results in 219 or 220 for the decline in turnover test. Various other ways you might detect that there is some abuse of JobKeeper Relief is people offering discounts for cash deals without receipts, job for cash without pay slips, for example, and a variety of activities to manipulate turnover or employment arrangements. Now, cash incentives have been put together by the federal government. The first is pre-existing write-off, the instant write-off for assets, which was up to $30,000 per annum. Immediately it was hiked up to $150,000 per annum. That means that you can buy any asset up to the value of $150,000 and get an immediate write-off, immediate tax deduction, rather than depreciating over several years. The cutoff for this was originally the 30th of June 2020, but Scott Morrison has announced that it has been extended to the 31st of December 2020, another 6 months to make decisions on capital investment. This is for businesses with turnovers up to 500 million. But there are some limitations to this. Firstly, there is a luxury car depreciation limit of 57,581. It's not possible to get a write-off or deduction for depreciation on a car over this value. So if you went out and bought a new Merc for 150,000, you would not be able to claim an instant write-off of 150,000. You would only be able to claim $57,581. There are a few other things that are not available for instant write-off. These include items that go into what's called a software development pool, capital works deductions, which actually is not part of depreciation sections anyway, the low value asset pools where assets have been allocated to a simplified depreciation system already, and very strangely, and I have no idea what this relates to, horticultural plants are not included. More cash flow incentives. The main one is the PAYG withholding tax relief. This became available from 20,000 minimum to 100,000, and it's credited automatically to the ATO's integrated account based on the March 2020 PAYG withholding. This is 3 times the March PAYG withholding tax incurred by the business, or 10,000, which is the higher. So if you were a business with 2,000 PAYG withholding in March, 3 times is 6,000. You would actually get 10,000, not 6,000. So this can be very beneficial to really quite small businesses. 50% of this is then paid in June or in September. So if you are on the minimum payment of 10,000, you will get 5,000 in June and 5,000 in September. Please remember, this is not a direct cash payment. It is actually posted to your ATO integrated account. If that results in a refund, the refund will be paid to you, whatever that is. So it'll be offset first against any tax liability that's outstanding. This perhaps brings home the importance of cash flow projections. Because we have these initiatives coming in from the government for a period, they will come to an end. So JobKeeper Relief will come to an end at the end of September. We don't know what might then happen, whether anything will happen or whether there'll be another form of relief. So September could be a bit of a threshold for determining how businesses go forward. So what is really important is that cash flow projections are carefully made and viewed on a regular basis, particularly they should be anyway, but particularly at the moment. We await further announcements as to what might happen with JobKeeper Relief, but we are still very much in limbo. In Victoria, we've seen that the relaxation of some of the restrictions we had have been reversed. We do not know exactly what will happen in the future, so it's important to keep a very strong hold on cash flow projections for a few months ahead. And it is also important to maximize business development during this period of government support. So it's important not just to fall back and say, well, I've got some money coming through the door, everything's okay. It should be used carefully to develop the business for when we finally come out of this crisis. And finally, if you want to ask questions of the Melbourne Business Network, please address them to our email address, admin@melbournebusinessnetwork.org.au. And you will find some very useful information on 3 websites: the ATO's website, the government's Treasury website, and for Victoria, the State Revenue Office. So please have a look at those websites from time to time to see those developments. And thank you for attending this presentation today.